Alrighty, Japan's target rate was raised this week, but its stock market surged anyway. The yen carry trade is alive and well. And my question is whether Japanese liquidity is undermining U.S. Fed inverted yield curve restraint. Joining me now is Robert Hormats, Vice Chair, Goldman Sachs International, Craig Columbus, market strategist at Advanced Equity Asset Management, and Kevin Kerr, editor of Resource Trader Alert at DailyReckoning.com, and also a columnist for Market Watch. Gentlemen, help me on this, because we have to defeat Iran tonight, and we have to bust a bunch of illegal immigrants, so I need lightning fast. But I want to begin with Brother Hormats. Robert, it's great to see you. Good to be with you. Front page of the Financial Times, Nikkei surges to 7-year high on rate expectations, so they hiked their rate 1/4 to 0.5%. I guess they're not going to move anymore because there ain't no inflation. Robert, question. Japan's low overnight rate, does that muck up Federal Reserve restraint, and does that tip the world economy into a excess liquidity position?
Well, it certainly does help to provide additional amounts of liquidity. It's very, very liquid conditions in Japan and in other Asian economies as well. But the other element that gets a lot less attention is that there's a great deal of private sector liquidity. There are huge pockets of wealth. A lot of deleveraging has occurred in Japan and elsewhere in Asia, and you not only get the carry trade, which is supported by Japanese interest rates, which is still very low, you also get a lot of money coming out of Japan and other Asian economies to the U.S. fixed income market, and that also does exactly what you're saying, provides very liquid conditions.
Let me just follow up with this. I don't want to stretch this too far. Okay, there's Japan's economy. It's growing a little more than 2%. It ain't bad. It's not fabulous, but compared to what they had, it's pretty good. We'll show the next chart. I hope there's the CPI is flat, 0.3%. But their interest rates are low. Their short rate is 0.5%. Now, Robert, here's the thing I'm worried. America has an inverted yield curve. Short-term money, Fed funds rate is 5.25%, as you know. The 10-year bond, to use that, actually the 5- and 10-year bonds are both about 4.70. So therefore, American financial institutions, if they borrow short, they may lend at a lesser rate. It may be too expensive. On the other hand, why borrow in the U.S. Fed funds market when you can borrow in the Japanese overnight market at only 0.5%, which is 500 some odd basis points less? That's the thought I have, that maybe Japan is kind of undermining Fed restraint.
Well, it is, and the way you've described it, that's quite accurate. You can get yen very cheaply and convert them into dollars and buy dollar assets and get a very nice spread. There is one risk, however, and that is that the yen will flip up and it'll make it harder to do the unwinding of that trade. But that has not happened at this point, and is not likely to happen. In fact, the yen's going down. So in one curious sense, it does facilitate the very process you've talked about.
Yeah, I mean, the dollar's buying 120, 121 yen, and it's the dollar has appreciated against the yen and so forth, but it isn't a huge, massive swing. So the currency risk, not that big part of the story,
Absolutely
is it?
not. No, it's not. It's, in fact, that is one of the reasons people feel so confident that the currency risk is a minor one, and therefore you can simply get the yen, borrow the yen, and facilitate that kind of carry trade spread. And I think that is going to continue for quite some time, and 25 basis points doesn't change that, right, because the differential is still very, very large.
I mean, in dull market trading this week here in the States, really, if you look around, Japan up nearly 2 percentage points, was the best leader of the major markets, including the emerging markets. Kevin Kerr, welcome back to the program. My question is going to be real simple. From this discussion of Japanese cheap money and high liquidity, is that one of the factors fueling this big gold rally?
Well, I think that's a part of it, Larry, definitely, and Robert's made a good point, but I think the bigger part is concern over inflation. I know you're going to hate that, but if we look at some of the commodity prices that we got going on right now, look at the grain markets. These markets are surging. Look at the other metals markets. Energy prices are back up, and this has been a big driver for gold. This week alone, we saw gold, what, $25 higher, and a lot of that was kind of the uncertainty out of the Fed as well about future inflation prospects. So this is coming up now.
And you're looking for $1,000 on the gold price, you and Don Luskin.
Well, I'm looking for $1,000, but by this summer, I'm looking for gold to be around 800. If this stuff keeps up with Iran, that kind of uncertainty, we got uncertainty politically right now. You know, there's a lot of things going on, and with oil prices climbing, if we're back up at 72, gold will rise along with
Where'd
it.
gold close today, Kevin?
Gold settled up. I looked overnight here. It's already up $3 or $4 more, so we're getting close to the $700 level in the front month, Larry. It's going to be back up over 700.
All right, so Craig Columbus, we got a lot of liquidity coming out of Japan. We got inflation threats at home. We got the Iranian saber rattling. We're going to solve the Iranian nuclear crisis at the tail end of the show with Undersecretary Nicholas Burns. What's your take on the gold story and the inflation story and the Japanese liquidity story?
Well, I'm not a buyer of the inflation story. I think that the CPI print was a bit skewed. The January CPI print tends to print hot, largely because excise taxes on tobacco, you reprice Medicare. So I'm not a big believer on the inflation side. On gold, I think, look, you've got 10 bullion ETFs trading globally. I think there are 7 or 8 more listed in India, and that's about 25% of gold demand right there from that country alone. And obviously a lot of demand. But the last piece, there's a strong demand for jewelry, which is fueling the price of gold. Some of it is to do with, we're coming up on the end of this Indian wedding season where gold demand trail off in India. But the other thing is this is the year of the golden pig in China. In the Chinese New Year, the promise is if your child is born in the next 12 months for a lifetime of prosperity. So there has been a lift potentially in
So
weddings.
now wait a minute. The year of the pig, I've heard this story. You're my man. The year of the pig. That means a whole bunch of Chinese are going to get married, and that means there's going to be a lot of demand for gold jewelry. Is that your explanation for the very unique, Greg? I'm not saying I'm buying. I'm saying it's very unique.
It's a minor point, Larry. I'd say EF demand is big, electronics and manufacturing demand is another, and demand for jewelry is real. And the piece, the BBC ran a piece saying that Chinese maternity wards have beaten up in anticipation of an increasing birth rate.
Kevin, do you think the Chinese are pigging out on gold? Is that what's happening here?
I'll tell you, Larry, I have a 1-month-old baby. I'm moving to China. It sounds like a great deal to me. I think it's all a part of it. I completely agree with them. Tied in with the inflation argument, these are all reasons to buy gold right now.
Poor veteran observer that you are. There's an interesting piece on Barry Ritholtz's blog site about margin levels, that is borrowing from brokers to purchase stocks, have hit record highs, okay? $285.6 billion in January. The prior peak was $278 billion way back in March 2000. Now, this is a little obscure, but not so secure. If everyone's leveraging up to their piggish eyeballs, Bob Hormats, what do you make of that?
Well, I make of it the people are confident about the future. They see, as has been coined, the Goldilocks economy continuing. There's a lot of liquidity. There's a lot of liquidity here. There's even more liquidity coming in from Asia, as we've discussed, in part as a result of central bank policy, in part because a lot of people in Asia are deleveraged. They have a lot of money to invest, and a lot of that money is coming to the United States.
Spread of global capitalism, that's what I call it.
Global capitalism, and the fact is...
I have just survived the Nouriel Roubini assault, the last minute of the show, and I'm still bullish. I want to say that. I am still bullish. Go ahead, around the table real fast. Bob Hormat's favorite stock market right now.
I still like China over the medium and long term.
All right, Kevin, what's favorite investment?
Right now, it's got to be uranium and any miner that does uranium that does gold as well.
Give me a gold stock name. Give me a uranium stock name.
Frontier Development Group, gold and uranium.
Which one?
Frontier Development Group.
All right, Craig Columbus, favorite investment right now?
We're a buyer of the Taiwan ETF this week, EWT.
And how many marriages will there be in China, Craig?
Like you, I'm a Roman Catholic. It's a little bit beyond my scope.
Bob Hormats, Craig Columbus, Kevin Kerr, and I'm not going to go any further than that. Up next, it's Kudlow Stock Club. We've got a brand new member whose fund is beating the S&P this year. Always like that. He's going to try to help you create some wealth with 5 new stock picks. I love wealth creation. Coming up later in the program, U.S. Undersecretary of State for Political Affairs Nicholas Burns. He's heading to London on Monday. We're going to find out his game plan on reining in Iran's nuclear threat.
A nuclear-armed Iran is not a very pleasant prospect for anybody to think about. So I think we need to continue to do everything we can to make certain they don't achieve that objective.
Market